Hello, everybody. Thank you for tuning in to another episode of Thank You for Your Reply podcast. Today, we're speaking to Corby Goade, the CEO and founder of Boise Turnkey Systems. Thank you so much for taking the time today, sir.
Yeah, you bet. Thanks for having me on. I've been excited to chat with you.
Likewise, my favorite thing on your signature is the local burrito expert. So, big fan of burritos, and which we don't get very much of here in France, but there is a local chain called O Tacos, but someone needs to explain to them that they're burritos. They're not
That's
tacos
funny.
that they
Well, the
serve.
next time you come to the States, if you want to come visit, and same for any listeners, if you ever make it to Idaho, I love real estate and we'll talk about that, but I'm really excited about burritos. I'll give you a VIP burrito tour of our town.
Nice. That'd be actually pretty awesome, like a burrito bus that goes to the
Yeah,
different.
there you go.
Well, again, thank you. And what if I could just get you to introduce your company and how you got what led you to start it?
Sure. So our company is Boise Turnkey, and it may go without saying, but we operate mostly in Boise, Idaho, to capital Idaho. I was born and grew up here. And I guess I'll just try to give you the short version of our background. My wife and I, for about 25 years, had just been investing in real estate on our own, doing a deal whenever we could, when an opportunity presented itself and we had the means to do it. And we didn't know anybody else who was investing in real estate. We kind of fumbled through it and learned stuff the hard way and started trying to network and connect with people. And as we grew and learned more, we were still doing our own thing, but we had friends and acquaintances that were asking us how we were doing what we'd do and how we'd structured our deals. And after we got, I don't know, a few dozen of those questions, we kind of put our heads together and just thought like, well, why don't we create a business out of this? There obviously is a demand. And so really, to put it simply, we have a small real estate team, and everybody who's on our team is an investor, and we only work with investors on transactions. We do lots of stuff on market, off market, and then we have a property management side where we roll those properties when they're ready to rent into our property management system. And so we have a lot of clients that are really all over the world. Most of our clients are out of state, but we have some clients in Europe and in Asia, and we do deals for them and just make it as passive as we possibly can and try to get them the best returns that we can. So that's kind of it in a nutshell.
Cool. The seeing a need coming up and then jumping on it as an entrepreneur. So it can be a wonderful thing and a arduous thing we're learning here over the business that we're doing.
For sure. It's funny. I didn't grow up with an entrepreneurial mind
Me neither.
or experiences. And so jumping into this when we did, it was pretty scary for us, but pretty quickly we not only saw that there really was a need for what we're doing, but we started recognizing other opportunities too, which is kind of fun. It changes the way your brain works and you start seeing opportunities in other ways when you dig in and people start asking you for services.
Well, so on the topic of your business, let's talk a little bit about your role and your revenue goals. What specific metrics are you tracking to measure your success, and how do those align with your company's bigger picture?
Honestly, not being a big entrepreneur and not having a lot of experience, we actually don't really track our net revenue. What we do is we pay closer attention to some of the intangibles, and a lot of our goals are focused around giving our tenants excellent experiences, giving our clients excellent experiences, and collecting data around that. We have surveys that we send to them. And so every week when we have our staff meetings, we talk about how many survey responses we got, what the tone of those responses were, what feedback we got, and where we can improve. And we've just found that by focusing on making sure that the people that we're working with are getting good service and good communication, that the revenue just comes.
It speaks for itself, or runs itself in some way.
Yeah, I mean, it's not that we're not keeping an eye on the bottom line or expenses or anything like that, but we have a small staff, and we've just found that focusing on taking care of them so that they can take care of the people we work with has really provided us with way more opportunities and revenue than we would, I think, by just focusing on the bottom line.
And so to run that business and kind of manage all those moving parts, you must have some tools and systems implemented. Which change has had the biggest impact on your metrics, and what measurable results are you seeing?
Honestly, we do have some tools, but I would say that honestly, bringing good people on has made the biggest difference for us. And that's the biggest challenge in our business too, is finding good people who are dedicated and see the vision and want to serve in the same way that we do. But we have a few different things going on, but we have two kind of main arms of our business in the transactional side. And then we have the property management side. So on the transactional side, we have a small team. There's 4 licensed agents on our team, and we use Go High Level for our CRM. And honestly, we don't use it to our full power, to its full power. There's a lot more that we could do as far as setting up workflows and that sort of thing. But we focus a lot on, I hate to be a broken record, but like when we get inquiries, we focus on giving people really quick and consistent communication and service. And sometimes that comes through dropping them into a workflow or a reminder popping up, but a lot of in-person stuff, a lot of phone calls and that sort of thing. On the property management side, we use Appfolio to manage all of our communication, and it's a closed system, and so it doesn't talk to other software, but it has everything built into it that you need. So it does our bookkeeping, all of our tenant and owner communication, all those sorts of things, and they have great support. So Appfolio has actually been really great on the property management side for automating a lot of the things that we need to take care of, because so much of it was already built in and we didn't have to reinvent the wheel.
Yeah, that's I noticed, I used, when I started my agency of one here, the Reply AI, I started out as a Go High Level thing. So that's where I run my business off of. So I noticed when I looked at your website, I was like, he uses Go High Level because
There you go.
the font, it's the unmistakable font on the chatbot on the on the side. But yeah, Go High Level is a great tool, but a huge learning curve.
Yeah,
I found.
and we've gone through several CRMs on the real estate side, and there are real estate specific CRMs, and obviously there are sales, like more general sales CRMs. And at least in my limited experience, it seems like Go High Level is much more intuitive than some of the other ones that I've worked with, which I like. But there is a big learning curve. I think that's probably true with any CRM, but setting everything up and building your systems in there is definitely arduous.
So I wanted to kind of dive in a little bit more on, before we proceed on my set of questions, but just unpack what your business is a little bit more, like, because you have property management, but you're also selling and buying, or like you're acting as real estate agents in transactions.
Yeah.
So how is it? What are those two legs kind of?
It's interesting, and we're always refining our processes and communication for sure. But there are 9 people on our team in full. We have 5 people full-time on the property management side, and then 4 full-time real estate agents. And so the property management team has one weekly meeting that's just them, and then we have one full team meeting that's the agents and the property managers. And so we do a couple things in those meetings. For one, every quarter we have the entire team read a new book, and a lot of times it's either like a mindset book or a business book, or sometimes they're real estate specific books. And so we spend probably the first, and also we do EOS. And so the first few minutes of our meeting are just that initial check-in to see where everybody is on their metrics for that week and the activities that they're supposed to be doing. Then we dive a little bit into whatever section of that book that we've been reading in that quarter and how that applies to what we have going on. And our meetings are relatively quick. They're 40 minutes usually a week. And then usually the last 15 or 20 minutes, we're talking about specific issues that we have going on and where people need help, where we need more information or communication, that sort of thing. But almost every deal we do on the real estate transactional side is going to become a long-term rental. Okay. Some of them are shorter midterm rentals, but working just with investors, we don't really do many flips in-house because it's very labor intense, and sometimes they can be cost intensive for our clients. And mostly we're turning those into rentals, but we do a lot of light to medium rehabs for them, not in-house, but we have contractors that we connect them with and help them with some project management stuff. So anyway, when we get one of those under contract, basically our process is we walk through and do video tours for our clients. We suggest upgrades or repairs that are necessary to get them the most rent that they can. We usually can give them a ballpark cost on that. And if things are looking good, we get the property under contract. We bring our contractors in, they walk through and give actual estimates for that work. If everything's still looking good, we close on it. And once we close on it, we bring the property management team in. And so they can be a part of those conversations and the timeline. And so if it's a relatively quick rehab, just a couple of weeks, and we're doing paint and flooring and maybe a little bit of hardware, then the property management team's coming in right away and they're prepping an ad, and they're reaching out to recent applicants that we had to let them know that we have another unit coming on, and they're getting ready for all those advertisements as we're finishing things up. And a lot of that process is what we talk about in those meetings, to see where every job is and which contractors are on it, how far are they out from being ready, and what kind of rental estimates have been given out. And just keeping that downtime for our clients to a minimum is our number one goal.
Okay. And so are you, how do you go about identifying properties that you want to grab for the rental?
Well,
Is it like
it,
location? You like you prioritize certain locations or certain types of properties?
it really depends. Every client that we have is looking for something different. And they have different means and different experiences. And so, for instance, we have some clients that are very experienced investors that maybe they're doing a 1031 and they're going to have a load of cash and they want somewhere safe to park it. And one of the reasons people come to our market is because it's a very landlord friendly state. It's a very property owner friendly state. And so we do a lot of 1031 exchanges out of California and Washington and Oregon because people have different experiences there. Those are obviously very, very landlord friendly states, and we're close by. So for those clients who have a lot of experience and resources, a lot of times they just want maybe like a B level property that is turnkey that they don't have to mess with. It's just going to be plug and play. They're not generally not running numbers or having a spreadsheet. They just want to know what it's going to rent for. And if that number works for them, then they're great. But on the other side of that spectrum, we have some brand new investors that have very little resources and they want to find a way to kind of get their foot in the door with investing. And so those are usually a little bit different. We're really well networked with a lot of other investors in this valley and people who wholesale real estate and obviously other property managers. And so we see a lot of opportunities for deals that are off market that maybe need some rehab or some love. And depending on that person's situation, we do a lot of sort of house hack deals, like live-in house hack deals for our clients, where we work something out where we find a property that can qualify for a conventional loan and they can put 5% down and they move into the house. And then over the course of a year, we'll kind of help them strategize some rehab and maybe they'll do some of that on their own. And sometimes we'll bring our contractors in. And then at the end of that year, when they fulfilled their intended obligation to their lender, then they'll move out and leave it as a rental and we'll repeat that process. So we're sourcing deals from all over the place. It just depends on what our client's looking for. I would say a third of the deals that we do are off-market deals that we found just through relationships that we built. And probably two-thirds of them are properties on the MLS that are all over the place. We find great deals on the MLS.
Okay, cool.
For our market, at least. It's all
Yeah,
relative, of course.
yeah, yeah. Um, so with everything that's been kind of happening in real estate in the last couple of years, how are those changes affecting your growth strategy and what opportunities are you seeing?
It's definitely changed our client profile and the types of deals that we do for sure. In 2020 and 2021, when you could buy a non-owner occupied property with 20% down and get a 3% rate, we were doing a ton of deals with people because everything was cash flowing and it wasn't a big deal. So we did a lot of just turnkey on market deals. And as you're well aware, those deals don't work at 8% in the same way that they do at 3%. And so a lot of those types of deals have dried up. And so what we've done is we focused a lot more on newer investors who want to get their foot in the door and help them build equity through house hacking, like I mentioned. One of my favorite things to do is finding a small multifamily that's underpriced and needs a little bit of love and helping one of our clients get into there with a 5% down conventional loan and then working with them over the course of a year to get the place cleaned up and add some value and move them on to the next property. A lot of times, if we can build enough equity there, they have a little bit built in there that they can leverage in the future if they want. If we've got them a good enough deal, we can get them a little bit of positive cash flow and grow from there. But they can leave a trail of multifamilies behind them, only putting 5% down. So we've done a lot of those types of deals lately.
Yeah, in regards to the interest rate right now, I have my house in Astoria that have renters in it, and kind of decided I need to sell it. But the I've been trying to find a solution for keeping the renters in it because Astoria is particularly pretty rough for finding rentals,
Uh-huh.
and they've been pretty good tenants. But again, any of the creative things I've looked at just don't pencil out because of the interest rate right
Yeah.
now. But when I bought the house in 2020, I got a pretty sweet rate on it. So
Yeah. Those were the good old days.
yeah, pandemic notwithstanding.
Oh my gosh. Yeah, of course. Yeah, we did a handful of deals personally during that time. And I knew even when we were in the middle of that, I was like, man, I'm going to regret not doing more. And we did fine, but looking back, there were so many opportunities. And the funny thing is, I'm sure that you hear this all the time too, that there were so many people who didn't want to get in the game at that point because the market was so crazy. They didn't want to get into multiple offer situations. They didn't want to overpay, but a lot of people now would happily overpay for a property to get a 3% rate.
Yeah. Yeah, that's it was a VA loan when I did it too. So, but
Yeah.
not for me.
Yeah. I can imagine. So did you get in at zero down?
Yep.
Nice. Good for you. Yeah. That's
Yeah.
high cash on cash return on those deals.
Yeah. Yeah. I didn't have any money to put down, so it
Yeah.
was all. I'd happily went that way.
Mhm.
um, so, what are you describe your work culture, and what are? And it sounds like this might be one of the driving mechanisms of your business, but what are the things that are working really well with your current operation, and what's your biggest challenge that you're trying to overcome?
Yeah, honestly, the house hacks are going really well right now. We're doing lots of 1031 exchanges, so that's those things are all going pretty well. Our transaction volume it's just as high as it was during the pandemic. It's just the deals look a lot different now. So that's all going pretty well. The biggest challenge that we have right now, again, is just bringing people on. I would like to bring another agent or two onto our team. I like most business owners, I find myself spending a lot of time working in the business rather than on the business, and looking for good people to hand some of that off to, so that we can work a little bit more on marketing and growth and some of those processes we were talking about. But that's a struggle with anybody who's listening to the show. I don't need to tell them that it's hard to find a good real estate agent. And as an agent myself, trying to build my team, I'm having the same struggles that most people do.
Hmm. Yeah. Okay, that's it. So it's good that it's an expansion thing, not some sort of a crippling thing in the business.
Yeah, yeah. I mean, we have really good people in place now, and I learned when we were starting up that it's much better to have the right people than just anyone to fill a seat. Having the wrong person can create all kinds of new problems on top of the ones that you hired them to solve. And so I would much rather take my time and stay busy and wait until we connect with the right person than just fill a seat. So that's where I'm at right now. I've been interviewing people for a few months, and I'm waiting for the right person for that seat, so that we can actually make some progress here.
The Goldilocks of hiring.
Absolutely. Yeah, I'm looking for.
um, so in this sort of industry that's shifting with AI and automation and all this stuff, you're using Go High Level, and
Mhm.
how are you adapting your growth strategies to try to capitalize on those changes? Or is there anything that you're looking at to try to adopt?
We've been digging a lot into and using a little bit of, a little bit of AI. Actually, it's funny. I have one of the agents on our team who does really good production, and he's bringing new tools and stuff all the time into the office. But we use, for social media and reels and that sort of thing, we use Opus quite a bit to edit our reels and kind of help with some of that kind of stuff. But beyond that, we actually attend a lot of conferences to learn more about AI. I'm an old man. I'm almost 50 years old, and I'm a little bit behind the curve on that kind of stuff. But definitely trying to learn. A lot of the operations in our business are really old school, face to face, just relationship building stuff, and that's worked really well for us. I know that there's more scale to be had when it comes to using AI and leveraging your time a little bit better, and we're definitely interested in that. But I want to make sure that we're not losing that relationship base that we've had, because that's treated us really well, that approach.
Mhm. Yeah, that's one of a common thread of all the episodes I've had is about how much it's a relationship business, and it's about
Mhm.
building relationships, maintaining relationships. Um, and yeah, and as my what I do is helping um, business owners integrate AI into their system, into their workday, so that they can spend more time working on the business instead of in the business. And
Yeah.
but it always comes down, and then that can also help with have more time to work on the relationships too. But
Yeah.
yeah,
Yeah.
it is.
And it's funny, I'll struggle with something for a couple days, and somebody in the office will just mention me like, "Hey, did you just plug that into Chat GPT?" And the fact that that never even crossed it's such a simple thing.
Mhm.
And a lot of times I'll have a solution to this problem I've been working on for 2 days in 10 minutes.
Yeah, today I was playing with one of my. I use Sintra for um, some of my AI kind of Chat GPT uh, to, tasks, but I was opened up that has a little app, and it's I don't know if you've seen them on Instagram, and they're like little astronauts. They're like their brand is like these little astronaut guys that are the different AI tools.
I'll have to pay attention. Yeah.
So I was open that up to ask it something, but then it brought up something like it just furnished me with an idea, and I was like, that was actually really awesome. And I was like, what? I never thought of that. That's awesome. Yes, please develop that idea more further. And then I got this little like sort of strategy to roll out, and I'm like, huh, it wasn't even I wasn't even asking for that. It just decided to tell me that.
Yeah. I've even noticed, I mean, lately I've been trying to use just ChatGPT more. And I've noticed in the newest iteration that every time that I give it a prompt, it asks me questions after that if I want to keep going further, if I want to
Yep.
take a different angle. And that's been really helpful too, because in the past I would have just asked a question and then edited the response to fit whatever I need that I had. But it prompts you in interesting ways to keep refining what you need. And I find that very helpful.
Yeah, I also on that note, I saw the other day a post from Sam Altman, the Chat GPT founder. He said that everybody that's saying please and thank you is costing like millions of dollars in electricity
That's hilarious.
in AI iterations. And I was like, and I'm like guilty as charged because I've always felt like be nice to the robots in case they
Yeah.
take over. So, but I don't know.
It's funny. Every time I do that, I say please and thank you too. And then as I'm halfway through, I realize how ridiculous that is.
Yeah.
Just innate. I
I
think it's
just,
nice.
yeah, I think, I don't know. On some level, I feel like it probably is going to get you better long-term results or something. I don't know.
Well, when the robot overlords take over the world, they're going to remember the
Yeah.
people who are kind to them.
Yeah. I said please and thank
That's
you.
right.
So looking 6 to 12 months ahead, hopefully
Mhm.
the robot overlords haven't taken over yet. But
Hopefully not.
what's your framework for evaluating your new opportunities and potential solutions?
Yeah, we're definitely looking at growing our doors on the property management side, and so that part of things, it grows organically through transactions that we do. But we have really great people in place, and we've spent a couple years developing some pretty good processes and relationships, and I think that we're ready to scale that a little bit. We haven't put a lot of effort into really scaling those doors, and it's one of those things that the margins in property management aren't huge. I know a lot of investors think that that's probably not the case, but when you're paying for overhead and contractors and all the resources that you need, we don't make a ton of money on it, but it's a very scalable model once you have your processes down. And so we can do a lot just with a handful of people that we have, and we can, I think, give our tenants and our clients a really good experience without having to invest a whole lot more and still scale our doors. So we're hoping to grow in the next year by about 10% on the doors that we have outside of the transactions that we do. And honestly, on the real estate transaction side, if our transaction volume stays the same and I'm doing 25% fewer transactions myself, I'd be a happy camper. That's kind of what I'm shooting for.
Yeah. If you could solve one major challenge today, how would that transform your business operations and results?
I think that honestly solving that one challenge of stepping away and working a little bit less in my business, it gives me a lot more opportunity to grow on both sides through marketing and just helping with processes and that sort of thing, which we can help our staff make more money, and we can return a little bit of that more to our clients once we're doing a little bit better and just serve more people. So yeah, I think that everybody would feel a little bit better. We'd have a little bit less stress, and I think we could share some of the additional revenue with the people who have treated our business and our clients so well. So that's really the goal.
And you could start your burrito tour business.
Absolutely. Yeah. If I could step away from real estate altogether and just focus on burritos, I wouldn't be upset about that.
Yeah.
Although I do love real estate. I'm only half kidding. Like I don't even feel like I work anymore. I know we were talking about becoming more efficient and the tools that are available. And of course everybody wants to do that. But I have so much fun every day. As you know, every day looks different and there's different challenges, and I'm working on different deals and with different clients. And it's definitely not a repetitive job. I like how dynamic it is, and it's always a challenge. I never feel bored.
Yeah, that's the dream to have
Yeah.
have that. The job I had before we moved was it's one of my favorites in a long time, which was I delivered beer for George Brewery.
Really?
I was ran a route in Washington
Hmm.
Monday or oh yeah, Monday through Friday or Tuesday through Friday, and just had drive like beautiful scenery, listen to audiobooks, get my workout in by lifting kegs and
Yeah.
cases, and it was great.
That doesn't sound so bad at all.
No, so when you're looking at the current market conditions, which metrics are you most focused on improving it, and why?
Honestly, I would love to see a little bit of relief in interest rates. It looked like about a month ago that we were going to see a little continued relief, and obviously that slipped away.
Yeah.
But I think really in our market, and it's not terribly different here than in Oregon, which it sounds like you're pretty familiar with that market over there. It's an appreciation heavy market, and the people who understand what happens in this market, they're not super concerned about having a bunch of positive cash flow. Most people are investing here because they understand that it's going to be passive and that the value of those properties is going to grow reliably over time. And generally that's been the case with our market, but it does make it a tough pill to swallow a lot of times if a property is cash flow negative by several $100s and you're just trying to get your feet under you and start doing this. So we keep a pretty close eye on interest rates, and a little bit of relief there I think would make a lot of a difference. And I would be shocked if we saw interest rates down where they were in 2020 and 2021 ever again in our life. And that's honestly, it's not great for our economy, but seeing stuff in the fives, which is a little bit below the historical averages, I think would get a lot of people back in the game and have them feel a little bit more comfort. And it would make it a little bit easier to make a lot of these deals work. One of the struggles we have, we do a lot of BRRRR deals for people, like I mentioned before, where we help them get in and renovate a property and then rent it out. And it's not really a problem to build equity up for them. But when they refinance on the back end at 8%, that can be a painful pill to swallow.
Mm-hmm.
So if we can just get, in the low sixes, mid fives, and make those deals cash flow neutral or a little bit positive, and people are walking into that having 20 or 25% equity, I think that's a pretty easy win for everybody.
Mm-hmm. Yeah, I was looking at, I think it was maybe almost 2 years ago now. I was like thinking about maybe doing a HELOC, and then, but then just again it didn't pencil out finance wise. I was like,
yeah,
no.
Especially
with my
a lot of HELOCs now are 9 to 10%. It's
Yeah.
tough.
Yeah, and you also and you probably have come across this too, but as a landlord, where you, especially in Astoria, the rents are pretty high, and people will get on Facebook and lambast you for what you're charging for for the rent, but they don't realize that if they went and bought a house, the mortgage would probably be higher than that rent is that
Yeah.
they'd be paying.
Yeah. Social media is a dangerous place for that kind of stuff. And I hope I've been clear, like through the way I've talked before. Like I understand that tenants are what make all this business work. And so I have a lot of respect for tenants. We want to treat our tenants really well. But I'm also a firm believer that landlords don't decide what the rent is. The tenants decide what the rent is. If you put a place out for rent and it's higher than what the market will allow, it's going to sit vacant forever. But tenants decide if they're going to rent a place or not. It's really up to them what the rents are collectively. And so I don't.
That's true.
I don't waste too much energy worrying about whether or not it's fair. We try to price things at what the market will allow, and the tenants decide if they're going to accept it.
Mm-hmm. Yeah, we talked before the call. We were talking about Portugal, and one of the things that's happening there, there's a lot of foreign nationals that are moving to Portugal and buying, buying homes or renting, and they're, particularly Americans, can come in there and pay what still is cheap to Americans, but is high for the local population, and it's driving up the value of all the properties, pricing out the local people. But it's local people that are selling the properties, and it's not like because they like to scream about like, oh, these foreigners coming in and buying, but it's like they're not, the people that are selling the properties aren't upset about selling them at a high price.
Yeah.
It's not like they're not going to be like, oh, no, I don't want to sell it for that. That's too much.
Yeah.
I'm going to sell it for $100,000 lower or whatever.
We have a very similar thing here going on with people moving from the West Coast. We have a lot of people moving into our town from the West Coast, and a lot of local people, they complain about the rents, and understandably so. I mean, it's the same, it sounds like in Portugal and in Oregon, that a lot of times it's tough for locals with the wages and all that to make things work. But on the other hand, if you own a property and you're upset about it, I don't see people selling their properties for half of what the going rate is just because they think that it's unfair that people are coming here and paying higher amounts. So
for philanthropic reasons.
Exactly. That's the free market, and people get to decide what they want to sell their property for and what people are willing to pay. And I think that a homeowner should take every advantage they can to capitalize on that.
Yeah. If someone will buy it, and then just like the rent, if it's priced too high, it'll it'll sit on the market, and
Yep.
you got to lower it. But
100%.
uh, um, so our last question of the last official question. So is based on where you want to be a year from now. What advice would you give about balancing immediate results with long-term business building?
Boy, that's a great question. Let me let that soak in a little bit. Can you repeat that back one more time to
Yeah.
make sure I got it?
So just looking ahead, what advice would you give about balancing immediate results with getting long-term business or having long-term business building?
We talk a lot about time blocking in our office. I don't know if you've read The One Thing by Gary Keller.
I have not read it. I know
Okay.
it's on my list.
It's a great book.
It's been mentioned.
It's all about focusing on, at any moment, focusing on one thing that's going to move the needle the most for you, either personally or in your business. And there's a big section of that book about time blocking and reserving times during the day for very specific activities that need to get done. And my wife is actually sitting right behind me here, and we had a long conversation the other day about how terrible I am at time blocking. And so we're both doing time audits for the next 2 weeks to sit down and see where we're focusing on things that are going to move things forward and where we're wasting time or doing things that we should delegate to somebody who's more appropriate to do that sort of thing. And so I would say the advice that I would give to myself is making sure I'm stepping back a little bit and taking the time to look at how I've spent my time every single day so that I'm preparing the next day to focus on the things that are actually going to move the needle for me. And thinking about this time blocking thing, as a matter of fact, we're recording this at least local time right now. We started at 11 a.m. And so I was thinking about that concept this morning as I was going through, and all I did this morning, and I mean, it was important things for the day to day, but I was just returning emails that I had piled up in my inbox. And those are things that I could probably have AI assist me with, or I could have a VA assist me with, or somebody else in the staff could handle a lot of those replies. And so if I step back and look at the highest and best use of my time, I know that I'm failing in a lot of ways. And so that's a very timely question to ask. I would tell myself to step back and do a better job of auditing my time and focusing on whatever task is going to move the needle the most for my business at that moment.
Yeah. That's a good one. A nice salient piece of advice to end on. So
Thanks. Appreciate that.
Well, in that regard, maybe we'll call it end of the episode, and
right.
let you try to audit some of your time and claim back some of your time.
I would love to. For the record, this has been a great use of my time. I've enjoyed our conversation, and I know
Likewise.
getting the word out. Who knows? Maybe I'll have some rock star real estate agent reach out to me that wants to come work with me.
You could. Yeah. I'll put the contact details in the show notes.
Excellent. Thank you so much. I appreciate it.
Thank you.